Hello and welcome to FX Street Currency in Play. I'm Matt Brown. I'm joined down the line by Ed Matz from Matrix Trades. Good morning to you, Ed.
Morning, Matt. How are you this fine morning? It's sunny here for a change.
Fantastic. Yeah, very well, very well. Lots to talk about and lots to get through today. Let's start off with some headlines. Cable, well, we're seeing sterling boosted after UK GDP numbers coming in at 0.4, expected to be 0.3. So some good numbers there, and the pound moving to the upside on the back of that. Euro dollar, euro little changed after German business sentiment rises to record with the ECB driving the market. And we're going to talk a lot today about the ECB ahead of tomorrow, which moves us on to your cartoon today, your drawing. Taper, weaker euro, Draghi looking both ways, not sure where to go, what's going on. Just explain this cartoon to our viewers, please, Ed.
Well, hopefully it's self-explanatory. Everyone knows the story of ECB. They're looking to taper, signs or pick up in economic growth in Europe, although obviously not signs so much of inflation, but they need to taper because their quantitative easing program is too aggressive for the economic conditions. And yet they're not doing it. And one of the reasons why is because the euro is so strong. So if they go ahead with taper, they believe that the euro will continue to rise, and that will that will dampen any economic growth, and therefore the reasons for the taper. So they're looking both ways. And what we saw last month was really interesting because we talk a lot about Donald Trump smashing the market, smashing correlations. As Draghi came out with a dovish comment and the bund yields fell as the consequence rallied, you would have thought the euro came off. But because he didn't actually come out and say too strong a message about the stronger euro, the euro went up. And so, in fact, the ECB and Draghi themselves are breaking down correlations. And that's the dilemma they face, Matt, is they do need to taper. They're well behind with that program, and they will very likely announce some sort of schedule for the next year. They're due to announce it effectively tomorrow. And the question is going to be how much. And so what I expect they'll do is come out with something fairly robust in terms of how they're going to taper over the next 9 to 12 months. But be really benign in their language, and yet they may spike it with a comment about the euro. I think the net result is the market's going to go the same way. You're going to see some. The euro will strengthen on the back of ECB. Bund yields, in fact, may well come down as well, and DAX may go through the roof on the back of effectively a strong economic message. So it's going to be, and DAX in dollar terms is going to be probably the play into tomorrow. So that's Draghi. He's got a dilemma, a paradox. What the ECB hasn't realised, and I'm quite disappointed in many ways, says he, is that what they haven't realised is the reason why the euro stays strong in the anticipation of taper. If they actually went ahead and tapered months ago, the euro wouldn't be so strong. It's the old adage about buy the rumour, sell the fact. Had they introduced be strengthening on the back of the expectation of taper, because it'd be, let's move on. What's the next program? Where they're going to reinvest their money? Are they going to invest in German state bonds? So they've got themselves in a mess. Tomorrow he's got the weaponry, he's got the power to shoot down the euro and in fact do something constructive. They need to do it sooner rather than later. Otherwise, same story, yeah? It's going to be the euro stronger. It's going to be bunds getting all sorts of confusion there, possibly yields coming lower if they don't taper, but possibly ramping and feeding the euro rally if they do. He's confused. He's confused, and he's not a marketician. He's an economist with a very good economist, a very good administrator. But it's about time they pulled the finger out and actually fired one of those rockets.
Understood. Listen out, Draghi. Worth listening to Mr. Matz. Moving on, looking at the Aussie dollar versus the dollar on the CPI. We'll start off with that, and then we'll talk about the UK GDP.
Everyone's saying it's all about ECB, but it's not. It's clearly, you have three things right smack in our faces. But on the one hand, we have this blowout, this massive blowout in stocks that is driving a lot of the currencies. We talked last week about euro yen rallying on the back of the Nikkei, and obviously the US markets are ramping. And, hey, Ed, you said it was a blowout and a crash. Yes, it is a blowout and a crash, and we're yet to sell US indices on that. But we've got one very important tell we're waiting for. Anyway, that's the US stock element, which is very, very important to this market. But last night we've got Aussie CPI came out a tad worse, but Aussie took it in the neck, surprising the extent to which it took it in the neck. Brought Aussie Kiwi back down, and obviously the Kiwis being weak. The Commonwealth country, it's weird how the Commonwealth countries seem to move as a block. You've got Canadian dollar, Kiwi, Aussie, and even sterling. They're all weak at the moment, more on the yield play than anything else. And that's what hit Aussie last night. Lower inflation. They're not as hawkish as the Fed and as many other central banks, and the net result is comes off. But one thing we do at Matrix Trade, and as people will well know by now, is we not only look at what we think is driving the market, but we actually look at how people position into it and what history tells us how they react. And obviously on a miss like that, it sells off, but then it consolidates, Matt, and for 24 hours or so, and then starts recovering. So this could be a bear trap. We think it is a bear trap on the Aussie, which is going to prove interesting for one or two of the Aussie crosses.
Understood. And looking at the pound after the GDP numbers as well, looking afterwards, it's a beat. Could we expect then, as you show on your chart, the pound to rally slightly against the dollar?
Well, it's already rallied 60, 70 points. There's a squeeze going on. People get, I always made a point about people getting overexcited. When you've got an event that's right into another event, what it does, it releases amount of energy. It's like a short-lived battery. So this is squeezing the shorts. A lot of people are short on cable, and to some extent they're rightly so, because we think there's one more spike down, a bit like the Aussie we've seen in the last 24 hours. But this is going to squeeze them, and it's going to go sideways to up, probably into the Bank of England next week, because obviously a slightly better GDP is going to, it's going to fuel the thoughts about monetary tightening, etc. So people, again, and they'll go into the meeting, and they'll no doubt be slightly hawkish, and cable will spike higher, and then give Carney a couple more days, come out dovish, and cable will be spiking down like the Aussie did. So this is a squeeze in cable. I expect it to take the stops. It's taken a few already, and then make the new low.
Understood. Moving on, looking at euro dollar and the ECB, the DAX and the ECB. It's all about the ECB, as we mentioned at the top of the show. Just briefly talk us through euro dollar, DAX and euro sterling, and how they may perform after the ECB comes out tomorrow.
Yeah, this is again. This is what this is euro dollar, DAX, and euro sterling. What they do typically into and out of ECB. And you can see from it that it says DAX ramps aggressively, the euro actually stabilizes and sells off, and in fact that euro sterling sells off and then recovers. Forget those fractals, quite frankly, because I mean, people might be surprised I said that, but this is a different one. This is about taper, so I expect the dynamic to change, and hence why I'll show you a chart in a minute why we're bullish on the euro, why we think, in fact, DAX won't sustain a ramp until tomorrow, but will ramp probably the 24 hours or so afterwards and try and catch some of the other indices up. And euro sterling is actually now quite vulnerable as sterling hawkishness comes in, tempered to some extent by a potential euro dollar rally. But go back to the point. We follow what drives markets. If the conditions are similar, then there's no reason not to expect the markets to do what they do with similar conditions. Tomorrow's conditions are different, and that's why I'm personally looking for these for the euro-dollar fractal to break. In other words, what may happen is it may start to work initially, may sell off, and then ramp. I mean, that's the bottom line. Basically, as people, certainly as our subscribers will know, is that we're long euro dollars, and I'll show you in a second. You want to move to the next chart?
Yeah, moving on. Let's have a look at, well, this is the euro against the Aussie dollar first off. So look, just talk us through this.
Okay. Euro Aussie, the reason I've shown Euro Aussie is because it's a combination of what we think is going to be a resumption of the euro uptrend, but it's also a risk aversion play. Of all the currency pairs out there, if you're looking for a top as we are, looking for a blowout, looking for an opportunity to sell stocks, it's challenging, it's frustrating, it's a patience game, and people getting hyper bullish. But one of the trades into a possible crash risk aversion is Euro Aussie. Euro is a safe haven, and particularly within this euro uptrend, it's the third safe haven after the Swiss franc and the yen. And then the Aussie is the risk aversion vehicle. If there's one currency that gets hit and the Aussie's weak in a risk aversion setup, it is the Aussie. So that highlights Euro Aussie, and lo and behold, the chart is bullish. The chart is saying, it may not turn out to be risk aversion, although I think it will be. It's a great play in itself, and it says that Euro Aussie is going to 177. Matt. I mean, that's a big chunk. That's you're talking 15-20% move over the next few months, whether there's a crash or not. If there is a crash, stock market crash, then that will really kick in. And it's actually breaking higher today. It's just tweaked above the highs. Whether it sustains it, it's been a slow start so far, but it's building up.
And that's an interesting currency pair, so look out for that,
it's
viewers.
A gorgeous currency pair.
Gorgeous. And just finally, we touched upon it, euro dollar as well, some euro strength. Just briefly, just talk us through on the hourly chart.
Yeah, we've covered. I don't want to go back over old ground, but we've covered the euro dollar before. Basically, a head and shoulders. It bought 75% of its head and shoulders. Has got the market short. It hasn't reached it 75% of the time. It reaches it bought 75%. Typically goes 75% of the move. We think we've seen the bottom at 116.68. It is now rallied constructively back to the headline. All the head and shoulders merchants are going to start selling again, and in fact they're now drawing a bigger head and shoulders lower down. And what we're expecting in the next 24, 48 hours after ECB is to see it ramp and take out 118.80, get everyone bearish, all the stocks taken into the 2095 high, and they'll start selling again. So euro is one of the exciting pairs, and obviously we're looking for ECB to trigger that. As to whether it will or not remains to be seen, but it's certainly got a window.
Fantastic. And just looking ahead today, durable goods, obviously out of the US, that'll be a big one. And Bank of Canada interest rate decision, just picking out those two. No surprises from Bank of Canada today, I assume?
Not from the Bank of Canada. Everyone's expecting a pretty benign statement, slightly dovish. What I think the market may actually surprise, because it's in the last leg of a pretty constructive rally, pop above 127.10. It's got a chance later for 127.75, previous corrective high, but I'm a seller of dollar Canada now, and I'm looking for US yields. Dollar Canada is gripping the 10-year differential, so it needs to show signs of divergence. But so before I sell dollar Canada, I want to see that divergence in the differential. In other words, as US yields come off or Canadian yields pick up and dollar Canada is still ramping, then I'll sell.
Fantastic. Well, we look forward to, obviously, the ECB tomorrow. But in the meantime, Ed Matz, thank you very much for joining us down the line.
My pleasure, Matt. Have a good one. Good luck, everyone.